Hello, everybody. My name is Lee Schwartz, and I'd like to welcome you to our webinar for dental practices. Today's topic is You Got the Funding. Now, how do you report it? I noticed a lot of familiar names on the attendee list. I know a lot of you have been a part of our past webinars, and we're excited to continue bringing you this important information. Now, we'll jump in here in a sec, but a couple of quick housekeeping items. If you have a question during the webinar, open up the chat box in Zoom and submit your question to all panelists. We are going to leave plenty of time at the end for Q&A. Also, we're recording this webinar today. You will receive an email with a link to a survey, as well as a link to the SVA resource page where the webinar recording will be available. And please feel free to share that with others as well. Now, many of you are already clients of SVA, and we'd encourage you to reach out to your SVA contact if you have questions coming out of this. I'd also encourage you to share our contact details with other contacts in the industry who could use our help. Over the last, 8 months, we found there are a ton of practices that aren't getting timely or knowledgeable advice from their CPAs and advisors, and we are happy to help. If you're not a client and you have questions, please reach out to me and I'll get you connected to a subject matter expert at SVA who can help. Okay, so I know there's a lot of anxiety around forgiveness of the PPP loan. So we're going to focus on updating you on the current status, how to track your funds, and ultimately how to apply for forgiveness. We're also going to touch on some details of the HHS grant. If you've attended any of our past webinars, you're probably already familiar with our presenters, but for you first timers, both Andy Slinger and Laura Zock are CPAs and principals with SVA certified public accountants, and they help lead the team that works with dentists really all around Wisconsin and the Midwest, and they help them minimize taxes and maximize profitability. Special thanks to Andy for pinch hitting at the last minute. For those of you that signed up only to see Matt Vanderloo, I'm sorry to disappoint you, but Andy will be in his place. All right, I will be back towards the end for some Q&A, but Laura, I'm going to let you take it from here.
Great, thank you, Lee. I had to find my unmute button there. Well, welcome everyone for our conversation today on all the funding that was available to you as dentists throughout coronavirus times. We're going to spend the most of our time on PPP today, but first we're just going to refresh our memories about a few things that we had going on in our practices early on within coronavirus, and then we'll dive into some more details. So as a dental practice, there was a lot of stimulus programs available to you to help mitigate some of the losses with coronavirus. The biggest one obviously being PPP loans. Most practices we know, practically all of them I would say, did apply for and receive PPP loans. You probably also applied for the EIDL grant, receiving up to $10,000 if you had 10 FTE employees. As a dental practice, you also had advances from Delta Dental to help during those months when there wasn't any cash flow coming in because you weren't seeing patients. There also was a Delta Dental payment for PPE that they provided, a one-time payment. Then there were various local and state grants that were available for applying for on a more local level. A number of practices felt the need to provide some additional cash flow as well, in addition to the other programs that I mentioned here, and applied for an EIDL or an economic disaster loan through the SVA's program. And that was a low interest, long-term rate type of loan that's really, really favorable for practices and businesses in need during these trying times. If you think about all of these, any of these grants, money received, it's all taxable income when it comes to talking about it at tax time, with the exception of the PPP loan. There were also some credits available to help practices as they dealt with some of the normal matters that come up with coronavirus, right? If you have employees under quarantine, if you have employees that need to stay home to care for a family member who is diagnosed with COVID, or if they need to stay home because their child doesn't have daycare or school. There were a couple credits available for that where the Families First Coronavirus Response Act, or the FFCRA, provided some expanded paid leave up to 80 hours to help deal with those things, and practices can then receive the benefit or reimbursement for that, the majority of that leave time that they paid, through advanced tax credits available with payroll tax credits. Now, if we look ahead, let's talk about what is the PPP loan and what are forgivable expenses. So you'll remember that the purpose of the PPP loan obviously was to keep employees on payroll at a time when they could have applied for unemployment, and encourage businesses to be open and keep employees paid so that the harm wouldn't be so detrimental. So the focus obviously was on having payroll costs be used for PPP loans. And if you want to maximize your forgiveness, you'd need to spend at least 60% of your PPP proceeds on payroll costs. And payroll costs were considered to be cash salaries and wages paid to your employees, employer paid group health insurance premiums, state unemployment insurance tax, and then some retirement plan contributions as well for those employees. Up to 40% of your PPP loan, if you want to maximize forgiveness, could be used for non-payroll costs, those costs being rent, utilities, and generally interest on mortgage type obligations. Now let's talk about the covered period, which the SVA, you'll remember, first came out when people were first applying for the PPP loan. There was an 8-week period that you had to use the funds during in order to achieve maximum forgiveness. And then shortly after that, the SVA came back and said, no, we realize you need more time to spend that in order to maximize the options here. So they extended that covered period to 24 weeks. So you, as a recipient of the PPP loan, you could choose to use that original 8-week period or an alternate 8-week period that essentially starts to align your payroll timing periods with that 8-week period, or you could choose the 24-week period. We're seeing that it makes most sense for most practices to go ahead and use that 24-week period. That gives you a longer time to count your payroll and other expenses, and ultimately should help you achieve maximum forgiveness. If you ended up receiving a PPP loan through the second offering of the program, then you don't have the option to use the 8-week period. You must use the 24-week period. And those periods start on the date that you receive the proceeds from the loan. So now you've got your PPP loan, you've used your PPP loan, your covered period has ended. Now what? So now it's time to think about applying for forgiveness. The SVA is now actively accepting applications for forgiveness, and many banks, but not all, many banks are accepting them as well. So the process works as this. You as the practice will go ahead and complete your PPP loan application and submit it to the bank. The bank then has 60 days to review your application and make an initial determination on what's forgivable versus what's not. And then they send it off to the SVA, and the SVA has 90 days to make a final forgiveness determination. And then the bank corresponds back with, the SVA corresponds back to the bank, pays the bank back for the loan, and you'll receive communication from your bank then when the SVA has approved things, and they'll keep that moving forward. Now, one thing we want to clear up, there was some confusion. Applications were not due October 31st. You actually have until 10 months after your covered period ends to submit your actual loan application. And these loans remain on your books, your financial statements, as a loan until the SVA has approved it for forgiveness, and then you know what amount is actually forgiven versus remaining on your financial statements as a loan. Now you might be wondering, what's this look like from a tax perspective? Currently, here is how the rules work for tax purposes. Income from a forgiven PPP loan is not considered taxable. Normally, forgiveness of debt such as this would be a taxable income event, but it's been made clear that when the PPP loan is determined to be forgiven, that is not considered taxable income. Now, expenses currently that were used for forgiveness by the PPP loan are not tax deductible. So in essence, what's happening then is your PPP loan essentially is taxable if you can't deduct the expenses that you used with the PPP loan proceeds. Now, this treatment was not what Congress's intent was when it came out with the PPP program. And you've probably heard in the news that through some different second round, third round stimulus acts that have been tried to be passed, but didn't end up being passed before the election. And now we're dealing with situations with the election. There is hope that there will be a fix for this. The fix would be that the expenses paid for with the forgiven PPP loan would be tax deductible. But at this time, there is no final definitive answer or update on that. Another unknown out there is what year this all ends up being effective for, whether your PPP loan is forgiven technically in 2020 or 2021. And then since those expenses were paid for in 2020, but you might not have an answer or PPP loan forgiveness until 2021, there's definitely some uncertainties around what period do you count this all in. More on PPP loan forgiveness. Most practices should be able to see the majority of their PPP loan being forgiven if you only use your payroll costs. And if you think about it, that's because your whole PPP loan application was based on 2.5 months worth of payroll costs. And then the SVA extended that period that you could use it for up to 24 weeks. So we would encourage you as much as possible when you are doing your PPP loan forgiveness application to try to get as much forgiveness as possible just through your payroll costs, and it will simplify the process for you as well. Another thing to keep in mind, this might come as a little bit of a surprise, when your PPP loan goes through the process and is forgiven by the bank, forgiven by the SVA, that EIDL grant you received at the start of this, that factors into your forgiveness calculation. So if you ended up having a PPP loan for $100,000 and you had a grant of $10,000, an EIDL grant, that $10,000 you received as the grant portion of it will factor into that forgiveness, and you'd ultimately have $90,000 of forgiveness. Now, this might not apply to many practices on this call, but the threshold of whether or not you should have received a PPP loan is higher if your loan was $2 million or over. Anyone with a loan of this size is going to be audited by the SVA. We're currently not aware of when and how and the specifics around that process will happen, but above and beyond all, it's really important to have good documentation in your records that explain your reasoning around why there was so much uncertainty and that the loan was necessary for it. That'll factor into the audit we're expecting. All right, now that we've covered some of the basics and some recent updates about the PPP, Andy, what's new that we need to know about?
Thanks, Laura. You know, that's interesting you say what's new, because unfortunately, very little is new. You know, as you alluded to, we're waiting for Congress and the Treasury, SBA, IRS, whatever you want to call them, to release more guidance on exactly those unknowns that you referenced. So the couple tidbits we do have is, you know, since we last talked, there's a new form, and it's the simplest form that's now available to fill out for forgiveness, and it's Form 3508S. And it's only available to you if your PPP loan was $50,000 or less. And as I mentioned, it's the simplest form. So if you have the opportunity to use it, it requires the least amount of information, just some check the box certifications. So to recap, there's now 3 forms. And from simple to complex, it's the simplest is the 3508S that I just mentioned. Then there's the 3508EZ. You certainly want to see if this one doesn't apply, see if the EZ applies to your situation. And then I guess the most robust form is just the standard 3508. So again, review that, because there's no sense filling out a more complicated form than what applies to your situation. Keep it as simple and straightforward as possible. The other clarification we got is rent paid to a related party. And I'll explain what a related party is and give you an example. But the clarification is that if you are submitting rent, and as Laura alluded to, this doesn't apply to you if you're going to get forgiveness by just submitting payroll costs. But if for whatever reason you need to include rent in your application, in that calculation, then the rent you claim can't be more than the mortgage interest on the loan for the building on the related party's books. Okay, that's complicated. So if this applies to you, the simplest example is if you own the practice and you also own the real estate that you practice in, but those are in separate legal entities, you very likely pay rent to yourself. The practice pays rent to the building entity, and that's considered self-rental. That's considered a related party. So in an extreme example, if you have that situation, but you've paid off your building, so you don't have a mortgage, it's debt-free, then guess what? Even though you pay rent, since it's debt-free, you don't have any mortgage interest, none of that rent would qualify for forgiveness. So again, it's a small carve-out of clients. And again, this only applies if you're having to submit rent as part of the application. If you're just going to submit payroll costs, that rather complicated tidbit doesn't apply. Okay, so that's all that's new as we wait for more guidance. So the question is, well, what can we do now? You know, the first thing, as Laura alluded to, is consider your covered period, whether you're going to take the 8-week or more than likely the 24-week, and see if at this point, you know, you can go ahead and fulfill that and apply for forgiveness. Then most importantly, talk to your bank. As I've told clients all along during this process, you got to stay in touch with the bank. You know, that's where you got the money and they're the gatekeeper that's going to accept your application, require documentation from you, review it, and then submit it to the SVA. So nothing happens without that critical partnership with your bank. So find out what your bank's application process is, because everyone's going to have a slightly different process for intake of that application. Find out what support they're going to require to review and approve that application. All right. And as a reminder, they have 60 days from the time you send them everything to approve that and pass it on to the SBA. And then from there, the SBA has 90 days to consider your application. So at its worst, it could be a 5-month process. So you want to start the clock with both the bank and the SBA. And the good news is we've heard that, you know, some clients that are getting their applications here in early are achieving forgiveness from start to finish in a matter of weeks. So we do expect that, you know, if you can get it in here early, you might get forgiveness quicker. Like with anything else, once they get more applications and they back up a little bit, it might take longer. So consider that. The other things that you should be looking at and considering is, as Laura alluded to, there's a lot of unknown with the tax impact. And she did a really nice job of explaining, you know, what not taxable income is versus non-deductible expenses. So I won't repeat that. But the bottom line is this is going to be a taxable event based on how the law is written now. Okay. So we almost need a little flow chart, a bunch of if-then, so you can follow this along. But consider some of the options, and this is certainly not all inclusive. But when on this slide, when we say non-taxable income, we mean you get forgiveness of the loan. So let's say you get forgiveness of the loan here in 2020, and the law stands as written now, and those expenses that you paid in 2020 are non-deductible. That's one option that could happen. We still have, you know, 6 weeks left here in the year. Another option is that you could achieve forgiveness of the loan in 2021, but once we get clarification, they could say, even though you got forgiveness in 2021, you need to apply those non-deductible expenses to 2020. So guess what? Even though you achieved forgiveness in 2021, under that scenario, the taxable event would happen in 2020. Another option would be that you both receive forgiveness of the loan in 2021, and they say, hey, since it's already 2021 and we were very late in giving you guidance, you can go ahead and apply those non-deductible expenses to 2021, which would make it a taxable event in 2021. Okay, so there's a lot of options. Obviously, the other one would be that they make the expenses deductible. And then, of course, you affect a lot of these options. So there's just so many unknowns. The other thing that has been concerning to us and a lot of advisors is what the elections and the results of the elections would have on potential future tax law and tax rates. And, you know, even though election day is passed, there's still a lot that's up in the air. And most importantly, what's up in the air from a potential tax law change, for those of you that are political junkies and really follow this like I do, as of right now, the control of the Senate is unknown, okay? As it stands now, based on what's been called, you know, there's 50 Republican senators and there's 48 Democratic senators. And as you know, there's 100 senators, so there's 2 races left, and those are both in Georgia. And those elections actually now won't happen until January 5th. So depending on what happens there, if the Republicans were to win at least one of those runoff elections on January 5th in Georgia, they would retain control of the Senate, 51-49. And if they retain control of the Senate, the point of all this is we don't anticipate tax law change in 2021 or likely even in 2022. So that's really the stay tuned that unfortunately we don't know. But as of right now, we would not expect major tax law change into 2021. Okay, the other thing that's going to determine the strategy and the effect on you and your practice is the type of entity that you're set up as, depending on if you're a C Corp, an S Corp, a partnership, or you're a sole proprietor. You know, we've met as a leadership group and we have our strategies determined, you know, for our clients, depending on what entity they are. And it's very different. So you definitely want to hear ahead of time with still 6 weeks left in the year, talk to us or talk to your advisor and find out, okay, what am I set up as and what's the strategy here, you know, based on the entity we are and the potential tax effect that the forgiveness of the PPP loan will have, whether it happens in 20 or 2021. Okay, so again, you know, stay tuned. You know, again, this is applicable after the election because, as I mentioned, you know, the Senate races are going to be decided no earlier than January 5th. So there certainly could be some still potential future tax law changes. We still are waiting regardless for clarification from Congress and the SVA, IRS Treasury on the timing of all of this and what years it'll apply to. So a lot to do, a lot to plan for. Now we want to shift gears a little bit from the PPP loan to some of you received HHS funding. And Laura's going to take you through some reporting requirements that you'll be required to do.
Thanks, Andy. Now, we didn't want to wrap this up before making a few comments on the HHS provider relief payments. As you recall, those stimulus rounds have come out in different phases, and dentists were first eligible for some funding here with phase 2 and an application related to it. And then most recently, last Friday, closed the period for phase 3 applications for funding. So what I wanted to talk through with you all is the reporting requirements that we're going to need to keep front of mind because that time period is coming up pretty quick. So along with receipt of those HHS funds, you'll remember you signed off on some long terms and conditions that, you know, really were hard to read and understand, but HHS has come out and said that anyone who's received in aggregate provider relief payments totaling more than $10,000 over the different phases and distributions through the program, there's going to be reporting required. So what you'll want to keep in mind is that that reporting period is going to start January 15th of 2021, and it's expected to be online through a portal. So the portal opens for reporting January 15th. The first reporting deadline ends only a month later, so February 15th. And then there's a final reporting deadline for those that didn't use all the HHS or the provider relief funds before the end of 2020, where they need to do an additional and final report that will be due July 31st. That's what we know right now about the timing of this. let's talk a little bit about what that reporting might all entail. There's going to be data required to turn in, and it really is all around the concept of, did you use the provider relief funds for the purposes that they were meant to be used for when they distributed and you received the money? And generally speaking, the PRF funds were supposed to be used for healthcare related expenses because of coronavirus that have not been reimbursed from other sources. So if you think about it, the PPP loan was meant to cover payroll costs. So those payroll costs that you use for forgiveness of the PPP loan, you can't use those same payroll costs to help substantiate your need or your use of the provider relief payment funds. So think about this as, what did you all need to buy to deal with coronavirus? It's obviously increased supplies and PPE, and your costs are what, 3 to 4 times for that type of stuff versus what you were paying originally. You probably installed some equipment in order to be able to treat patients or greet patients even in a more safe manner. And then you might have had information technology, facility costs, additional employee costs. Really, there's a lot of questions around what can you all include. There's some great information on the FAQs about that, but I just wanted to plant in your brain, like, these are the types of costs to think about. And then once you factor in how much of your provider relief funds you've used to spend on those types of things, you can then look to what were your lost revenues, and up to the remainder of your remaining provider relief funds can be substantiated by showing a decline in receipts from patient visits. And what they're doing for that is they're looking at, what did you collect for patient receipts in 2020 versus what you collected for patient receipts in 2019. So it's based on actual information, and it's based on a whole year versus year comparison. When you get to the point where you are doing the reporting, you're going to need to provide information about your organization, such as what's your ID number, how are you organized in terms of, are you S Corp, C Corp, partnership, etc. You're going to have to provide information showing calculating what your lost revenues were for the year, what were your expenses attributable to coronavirus, what assistance did you receive in 2020? So think back to one of those first slides I presented on where I had listed out all the different provider programs or stimulus available to dentists. You'll have to provide that type of information. And then some general non-financial information around employees, revenue sources, etc. This information is all provided out on the hhs.gov website, and they've got a ton of information out there about it. And as I mentioned, a really great FAQ section that has a lot more information about the specifics around reporting. I'm also expecting that they will continue to release more information and FAQs on the reporting process as we get closer to that date. So stay tuned for that. And HHS does typically also put on webinars to help explain to providers like what you need to do in order to do the reporting. And Lee, I think we're kicking it back to you here for some Q&A.
Yeah, so Laura and Andy, great. Oh man, that's a lot of information. And great job going through it all. I know we're almost at a half an hour already. So those of you who want to hang around, we're gonna hang around for a few minutes. We put together some questions, kind of frequently asked questions that we get that we'll cover first. We've also already had a couple come through via chat. If you have questions, please put them through the chat box. For those of you who need to jump and go see some patients, feel free to, we are going to keep this recording so you can come back and watch the Q&A later. But let's jump right back in. And one of the biggest questions I know you guys are getting all the time is, do I need to wait the full 24 weeks before applying?
The answer to that is no, you don't. You can apply at any point after you've already spent all the funds. I would be careful about the timing though. We want to make sure that you've used all of the funds and then some more, because we want to put you in a position where if someone happens to disallow an expense, that it's not harmful in terms of maximizing your forgiveness. And also your loan has been accruing interest since you've received it. So we also want some forgivable, we also want some expenses to help cover the interest and have the interest plus the PPP loan being forgiven.
All right, the next question we had listed, and then somebody sent it in about 10 minutes ago as well. So how do I calculate an FTE? Andy,
Yeah,
you want to take that
absolutely.
one?
Yeah, you bet. There's been some confusion on this one, but it turns out to be a little bit of a math problem. So you simply take the hours worked for the individual and divide by 40, okay? And then what you got to do though is you got to take then the average of all the weeks in your chosen covered period, whether it's the 8 or the 24.
Okay, let's talk about benefits a little bit. Can an S corp owner, an S corp owner's health insurance and retirement plan contribution, and an employee's health insurance and retirement plan contribution be included?
When you're considering S corp owner, this is how it works. So the most compensation you can count towards forgiveness is going to be $20,833, and that is like that $100,000 cap that they had on salaries for consideration for forgiveness, equated into 2.5 months worth of that $100,000 salary if you're using that 24-week period. If you're using that 8-week period, it's going to be more like $15,000 that you're capped at. You can only use 8 weeks worth of that $100,000 salary in that situation. And then for owner's health insurance is considered part of compensation. So the cost of your health insurance is included in that $20,833. So it's not that you can take $20,833 plus 2.5 months worth of health insurance. It's $20,833 covers your payroll as long as you've been paid that much in that 24-week period or 2.5 times period, including your health insurance. However, you can add the employee or employer share of the retirement contribution in addition to that $20,833. So you do get an add-on for that one.
Okay, so what form should a sole proprietor, an independent contractor, or a self-employed individual use?
All right, so this goes back to my comment of use the simplest form available to you. So if your loan is under $50,000 and you're able to check the certifications, use the 3508S. If you need to go to the next step up, go ahead and use the 3508EZ.
All right, and then moving right on to who can use the form 3508EZ.
Well, I guess that kind of goes hand in hand. And, this is really the certifications, that I mentioned. If you're not under 50,000, then you get bumped up to the EZ and you got to check the boxes. You either got to be self-employed, independent contractor, or a sole proprietor with no employees. You got to be able to check the box that you did not reduce salary or hourly wages by more than 25%. And you also didn't reduce your number of employees or average paid hours. So again, you really got to look at the before and after. And then it's the same thing where you didn't reduce the salary, the hourly wages by more than 25%. And the big and is you were unable to operate at the same level, because of, I'll call them government mandates. It's basically agency mandates.
Okay, so now a couple of questions that have come in from the crowd around when to apply for forgiveness. You guys talked about, Andy, you were talking about some of the unanswered questions. So somebody asked, what's the downside to waiting to apply for forgiveness?
Yeah, I mean, we've talked about this as a leadership group and talked it through. And if that's truly your preference, there really is no downside. It really comes down to some people, hey, and I know this is a loan, it's sitting on there. I just want to know if it's forgiven. I'm nervous about it. Well, get it in and get it done quickly. If you're a wait and see person, or if you're under that $150,000 threshold and you might think that they might forgive your loan automatically without you having to do anything, there's no harm in waiting. It really just depends on what your preference is.
Okay, we've also had a couple of questions come in now, pivoting back to the HHS grants. Is there a date range for the COVID-19 expenses? Is it related to the date the money was received?
What I've read through what seems like a gazillion FAQs posted on the HHS website is that there's not necessarily a specific date range that's pinned to when you've received the funds. They do acknowledge that there's probably a point in 2020 that earlier than that, you wouldn't have had any costs related to coronavirus. And I don't remember if they picked, it might've been like a early February or mid-February type of date. But really they're looking for expenses paid like from that date on through the rest of the year. Or if you haven't used all your HHS funds through the rest of 2020, then you have an additional, I think it's about 6 months in early 2021 to still use those funds for expenses. But then if you use the funds at all in 2021, you're going to be required to have that final reporting due July 31st. My understanding of how that's going to work.
Okay, and I think you
Hopefully
just
I answered that question.
Well, yeah, and Laura, there was another question that came in, which I think you just answered too, but I just want to make sure. So you talked about the date range for the expenses, but somebody is asking here, if you purchased equipment like a HEPA filter after receiving the funds, does that count for the fund forgiveness? You can spend those funds after you receive the funding?
Oh, yes, for sure. And you use the term forgiveness. That's maybe not quite the applicable term here. How the HHS funding is going to work is you received X amount of funds, and then if you can prove adequately that you spent, X amount on the healthcare related expenses is what they're referring to them as. And then the rest goes to help cover the differential you've seen in revenue that hasn't been reimbursed from other sources, both on the expense side and the revenue side. Then essentially you don't have to pay that money back. But if it turns out that you received an amount and when you go through all the reporting, you have some left that you haven't used yet, then you're going to be required to pay that back. And there's a bunch of FAQs out there on the HHS website too that does give a little bit more information about the specifics on paying it back. But as I would expect, there's constantly more information being released and shared. And so it's definitely been fun trying to keep current on all those sources. They've been keeping us on our toes so we can advise you all on this.
All right, and then we've had a couple of other questions come in that I think you guys have probably answered since the time they came in. If we're not answering all the questions, please feel free to reach out. I'm going to ask one more that came in, and it's around selling a practice and how to treat that, I guess the PPP loan on the books. I would imagine it's going to be different for everybody, but do you guys want to talk about how you're doing that now with either with people who are bringing in shareholders or who are buying or selling a practice?
Yeah, absolutely. I've already had a couple of those examples, and there's no cookie cutter answer. It's going to depend on the facts and circumstances. It's going to depend on when the transaction closes. It's going to depend on what type of entity is being bought or sold. So it's definitely something on the front end. You're the buyer or the seller, you're going to want to have an upfront conversation about it. Make sure you mention it to the attorneys involved. And like anything else, it can be worked around.
Okay, Laura and Andy, awesome job. Such great information. I know how much everybody appreciates it. As we wrap up here, I'd like to let you all know that you can visit svaaccountants.com/events, where the recording of this webinar will be located, as well as additional information on upcoming events. Our next dental webinar will be on December 9th, and the topic will be what you need to know about year-end tax planning in a COVID-19 and presidential election year. I'd like to remind everyone on the webinar that the SVA team is only a phone call or an email or Zoom meeting away. So if you're a client, reach out to your SVA professional as questions arise. If you're not currently an SVA client, please reach out to me and I can get you connected to somebody who can get your questions answered and can help. Again, we're here to help. We understand this is a difficult time for everybody, and anything we can do, we're happy to do so. So thank you again for joining us today. Have a great rest of your day, and we hope to see you at our next webinar on December 9th. Bye-bye.